Welcome back in. Well, those of you with federal student loans haven't had to make a payment for more than 3 years now, but come September, you'll be expected to start paying on that borrowed money. Student loans have been in forbearance during the pandemic. Now there's been a lot of back and forth about the repayments, and Marshall Clay, for the Welch Group joins us now to talk about what you need to do to prepare now for making those payments. Good to see you again.
Good to see you.
Some people might have been confused. You know, there was a talk about forgiveness of the loans. This is a different situation here. This is not the exact same thing.
You're right. I think the student loan forgiveness cases should be decided by the Supreme Court here in the next week or so, I think. So that's definitely a big thing for a lot of student loan borrowers. But the forbearance period is a little bit different. So this is, if you don't get any debt forgiven, this is any amount above and beyond that. So that period ends at the end of August, and so payments will resume in September. There will not be any extensions. I know there's been a number of extensions over the last 3 years, but those extensions will not happen starting in September. So people need to be aware of what their payments are.
So somebody applied for, got these federal student loans, they haven't been making payment. What do they need to know now? Other than just the start date?
Yeah, so the first thing is they need to review their payment options. So I think a lot of people have forgotten what it means to pay these debts off and how they can actually pay them. So I think reviewing your options is very important. There's a number of different ways that you can pay these debts off. I would recommend that our viewers, if they have student loan debt, to go to studentaid.gov. Okay. It's a website you can go to. It actually gives you some loan simulators where you can plug your particular case facts into these simulators, and it'll kind of feed back to you what your best payment schedule is. But reviewing those payment options is very important because you have to understand what that minimum payment's going to be. And I was looking at some numbers, reading some articles last week, and the average student loan borrower has about a $400 a month payment. So if you think about it, if you're making between $60,000 and $120,000 a year, that's going to affect between 5 and 10% of your net free cash flow that you bring home from your job. So this is a big deal. I think a lot of people are not thinking about this, and they really need to, because it's something that they have to start planning.
So $400 is the average for the minimum payment?
That's the average payment that all student loan borrowers had to pay. So that means that some student loan borrowers will have less than $400 a month. Some may actually have more than that. So it's important to look at what that required minimum payment is going to be and start budgeting now. And I tell people, look, go through and review all of your expenses. And you've got to look at all of your fixed costs, and you have to look at discretionary. And we've got about 2.5 months before the payments are due. So start find out what that minimum payment is, and find out ways that you can start setting that money aside now and get back into those good habits. Because for 3 years, people have gotten in some bad habits. They've relied on this extra money. They've probably been spending it. I hope not. I know our viewers would never do that. Right. A lot of people have probably been spending that extra free cash flow on other things, and it now has to be redirected.
I guess if it's any good news, that usually the federal student loans are lower interest rate than a conventional, and it doesn't fluctuate. It's usually fixed.
That's right. That's right. And I think a lot of the debts, I think, over the last several years have shifted from private loans to federal loans. I think about 90% of them now are federal. So if you do have private loans, this is an opportunity to maybe look to see if you can refinance to some other lender. I know rates have actually drifted up over the last couple of years, so it's probably not as good of a deal. But I think you hit on a good point. Reviewing all of your debts, all of those interest rates, because it may be that student loan debts, you should probably carry those debts and maybe pay off credit cards and other debts that are at higher interest rates. So we got a couple of months. All of our viewers really need to look at this because it's something that's going to come at us pretty quick.
Marshall Clay from the Welch Group, we do appreciate it.
You're welcome.
We'll be right back.